How have you been? How have you been? Apologies for we not having our class last week. Last weekend, I went somewhere and I was really occupied over there. Let me know if you can't hear me. Oh, I believe you guys can hear me, Sha.
Apology accepted, but you send us some gift.
All right, no problem, Sha. No problem, no problem. So, without wasting much of our time, because I think I don't want to spend more than an hour into this class actually. So, let's just probably get straight to the class. Let me open my what's it called here? My PowerPoint presentation is all right. And let me know if you guys can see my screen because I'm sharing screen already. And we'll be starting from where I feel you guys might be having one or two issues. And all right, all right. Can we all see my screen right now?
Yes.
Hello. Sorry, please unmute yourself and let me know if you can see my
Come
screen.
see it. But I
All
can
right,
see it.
that's fine. That's fine.
Which
Are you the only one in this class? I don't think I can hear
pencil.
more than your voice
You
actually.
can see it. You can see.
All right, that's fine. That's fine, guys. So the truth of the matter is a whole lot of, let me use the word, issues from people trying complaining maybe they are not getting the whole concepts that I've been talking about. So I've made up my mind to just probably start from somewhere once again. Do you get that, guys? So let me just say, let me give you a little bit of recap, and here we are getting everything pushing out to us. Let's start with forex trading for beginners, right? And I said a guide for female traders. Obviously, I won't be taking anything too complicated, while at the same time we'll be touching each aspect that we are supposed to touch. Do you understand that, guys? Please unmute yourself and let me know you guys are getting me and the class is interactive enough. Do you get that? And please make sure you are somewhere very silent because interrupting the class, we are recording it, and for it to be accepted online and for it to be okay to be uploaded, then we have to make it clean as possible. Do you get that? Yeah.
Yes, sir.
All right, that's fine. So based on popular demand, I'm starting all over, and I feel it's something very good. And for each and every one of us that we are missing out something, we can probably just get this. And trust me, we will all be having access to these slides, obviously, and the recorded version will be uploaded on YouTube latest this night or tomorrow morning, depending on what's it called on network. If there's enough network, then I should have it uploaded this night. Do you get that, guys? Sorry, are we there?
Yes, sir.
All right. All right. So starting from what is forex trading basically, and as I've said earlier, this will be more like a little bit comprehensive. And if we are not getting anything right, then after tonight's class, then that means we are probably not putting our mind and is not what we truly have passion for. Do you understand that? So now, start from the definition. What do you understand by the word FX, by FX market, right? It's actually a global decentralized market, which means where we have access to trade various currencies. And as I've said earlier, we don't trade just one single currency. Rather, we trade them in pairs, right? So, what does trading in pairs actually implies? that if you have the mind of trading GBP, it's not just possible for you to go online and be like you want to trade GBP. No, instead, you trade GBP corresponding with something else, maybe GPCHF, Swiss francs, maybe GBP GBP USD, GBP AUD, and the likes and the likes. Do you understand that? So, what we basically do on the forex market is actually a decentralized market whereby which gives us access to what trading currencies in pairs, and this market determines what the foreign exchange rate, that is the rate at which we exchange each currency. For example, if you are considering NGN, that is Nigerian Naira, that means one Nigerian Naira to US dollar right now is currently 1,690 something per dollar, right? Which means if you want to have access to just $1, then you should be considering having 1,691 naira with you. That is equivalent to $1. So now you are now performing an FX transaction if you are having 1,691 naira with you and you are exchanging it for dollars. So that means you'll be pairing Nigerian naira with what? US dollar. So we are going to be exchanging. So now, you now being the buyers or the sellers is now dependent on which transaction you are interested in. Are you the one holding? Are you the one holding USD in exchange for naira, or you are holding naira in exchange for USD? Do you understand that? So now it is also what the forex market is also what we refer to as what OTC, that is over the counter market, which determines what the exchange rate for what global currencies. And take note that it is actually the largest financial market in the world. Do you understand that? And it opens 24 hours. That is, it works round the clock. That is, for the whole 24 hours that we have in a day, the forex market works round the clock. Do you understand that? And it is only open for just 5 days in a week. The difference between forex and crypto, or forex and synthetic indices, is forex usually closes on Friday 10 p.m. GMT, 10 p.m. GMT. Do you get that? Or 11 p.m. GMT plus one. Why we Hey, am I talking to people?
Yes, sir.
All
Yes,
right,
sir.
all
Yes,
right,
sir.
Yes,
all
sir.
right, all right. So immediately after that, what is next? This is an example of what a forex market looks like. This is what a bullish market. What makes it a bullish market is the fact that we are seeing series of lows. After this low, the market has not returned back to this previous low. Can we still see my screen?
No, sir. We
Yes,
can't see it anymore.
Wow.
No,
All
sir.
right. Uh-uh. At least I'm sharing my screen. What about now? Someone, you are raising up your hand. Grace
no,
Oluwapelumi.
sir. Not yet. We
Not
can't
yet.
see it, sir.
You can't
You
see
can't
it.
see it. No.
All right.
Sis, I can see, sir.
I'm trying
I can
to
see your screen, sir.
present again. So let me know. Can you see now?
Yes,
All
we
right.
can see.
Yes.
All right.
I
Thank you
can't
so
see
much.
anything, no.
Then try and look for a solution over there. I believe you should be able to see right now. I'm sharing it already.
Yes, I can see it. I can see it.
All right. Thank you so much. Thank you so much for that. Thank you so much. So, as I was actually saying that this is an example of what this is how a forex market looks like. Both FX, crypto, and anything, we usually have a chart like this. Now, this is more like an interaction between the buyers and the sellers, and this is more like a bullish market because ever since this low was created, what can we see next? Is we can now see that the market has been finding it very difficult to come back to this low, right? Instead, looking and seeking for what? Higher prices, higher prices, higher prices, higher prices. Do you understand that? Now, next on the list is a graphical representation of what? A bearish market, that is a selling market. What makes this a selling market is ever since this high was created, the market is finding it difficult to return back to this high. Rather, it is creating series of what? Lower highs and lower lows, lower highs and lower lows. Now, immediately after, let me now move straight to why are we now trading FX? Why are we trading Forex markets? Why Forex trading? Why do we think it is important? We as a lady, instead of probably coming and begging for maybe urgent 2K and the likes, FX is actually part of what will make everything look seamless and easy for you, where you have access to virtually everything. Virtually what? Virtually everything you want in this life. I'm coming. Yeah. Can we still see my screen?
Yes, sir.
All right. All right. So now, why Forex trading? We are actually trading this because now, because of number one, the flexibility and the independence. As a Forex trader, you can always, once you have a data on your phone and you have access, you have something, you have funds in your trading account, you can legitimately carry just your phone and move to any part of the world in as much as there is an internet connection, and you will be opportune to trade the forex market anywhere. Do you understand that? So that's when we are talking of flexibility. Then you just talk about when we are talking about flexibility, then you actually consider forex trading. Do you get number one? So now I talked about this trading from anywhere with just your phone, laptop, or an internet. Is not a necessity. It's not really important that you have a system before you start trading. Of course, it's very good, but not major criteria. You can choose to and you can choose not to. If you have a system, added advantage, but with ordinary phone and your internet connection, you have access to the forex market, right? Now, no set work hours. That is, you can choose your trading schedule. That is okay, fine. I sleep a lot. Maybe my sleeping schedule might probably be maybe between 8 to 12 p.m., 8 a.m. to 12 p.m. Then I can always be like, okay, fine. I don't want to trade London session because London session starts around 7 a.m. All right, let me start my own trading around 1 p.m. That is New York session. Do you get that? We have different sessions you can trade when it comes to trade into forex market. So you don't have to force yourself on a particular what on a particular schedule. So it gives you flexibility. It makes everything very easy for you. Do you understand that? Now, potential for what? Financial growth. What does that mean? It gives you opportunity to explore what we refer to as financial stability, obviously. So, financial stability in what sense? You have access to what we refer to as, instead of you begging for Urgent 2K, you can easily open your MetaTrader 4 or MetaTrader 5 and have access to Urgent 50 or $150, maybe have access to urgent $100 instead of begging for what? Urgent 50, urgent 2K all around. Do you understand that? So now, opportunity to profit from both what? Rising and falling markets. Yes, as we all know, in crypto, if you are not really, if you are this type that buy coins, a lot of coins, right? If a coin is falling, dumping on you, you start panicking. But in trading, if you have the intention of, oh, gold is going to be selling, then the worst you can do is hop in on a sell instead. So, which means you gain money from both the buy side and the sell side of the market. Do you understand that, guys? So, after that, what's next is we have access to leverage. And what do you understand by leverage? Leverage is just that your broker giving you access to money that is more than what you have in your trading account. For example, if you have $50 in your trading account, you can always do what? You can always have access, trade like someone having $500. That's when leverage comes in. Do you understand that? So that was why I said while opening your Xness trading broker Xness account, choose a leverage that is convenient for you around 1 to 2,000. That is, which means if you have $100, you can always have access to the same trading setup as someone having a $2,000 account. Are we getting hello? Are we getting that?
Yes, sir. Yes, sir.
All right.
Yes, sir.
All right. So going back to this, high liquid means you can enter and exit trades quickly. For example, when we're talking about liquidity, the highest liquidity in the forex market is always experienced during New York session. Do you get that? It's still somewhere inside this slide also. So, and also at times when fundamental comes in, that is, what is fundamentals in forex? Fundamentals means news impact, news having news effects on the forex market. Do you understand that? So the next thing is global market access. You have access to any market of your choice in as much as you have funds to trade such a particular market. Do you understand that? It opens 24 hours, 5 days a week, covering all major markets. That is the London, the New York, Tokyo, and the Sydney session. Do you understand that? So next on the list is ability to access what? Market movement driven by what? Global events and news. That's when we are talking about what? The fundamental aspect of trading. You know, I said something that fundamental aspect is what? When we are considering news events, when news event is affecting what? Is affecting our trading opportunity. So now take note of this. Have this as a take home that if you are looking for flexibility, growth opportunity, and a connection to the global economy, then congratulations for what? For making the right choice to start learning what? To start learning trading. Do you understand that, guys? So next on the list is what? Basic forex terminologies. I've said this before, but for people that maybe number one, you guys missed the class. Number two, you are not getting it this way I was actually doing. Now, this is another opportunity for you actually. So now, number one, when we're talking about what currency pair, what does that mean? It is what we actually deal with when we are talking about trading. That is what we are transacting in. The currency we are transacting in is what the currency pairs. So examples are we have both the major and the minor and the exotic. The major are the most traded, the minor are they are not most traded, but at least they are still traded. While the exotic are the what? The ones with big moves. This is when we are talking about what? Commodities. This is when we are talking about GBP NZD. That is it's 0.01, the least lot size at times, right? If your account is not really strong, you might not be able to pick it. Do you understand that, guys? So that's about what currency pairs. Now, in forex, currencies are traded in pairs, right? Like GBP USD. So I now said something that when we have currencies in pairs, that is when we now have to to divide them into two places. We have the base currency and we have the quote currency. When we are talking about the base currency, and in a layman understanding, the base currency is what? The one that comes first. But in some cases, it's not always the one that comes first. Rather, the one that what? That is the strongest. That's the right English. But while talking to someone like to a beginner, just have it at the back of your mind that whenever we are talking about the base currency, then we are considering what? We are considering the currency pair, the pair that comes first. But know that when we are advancing, base currency in some cases does not usually comes first. Do you understand that? But in most cases, we have it coming first. So keep it at the back of your mind. GBP USD, GBP is the base currency, USD is the quote currency. Why NZD card, you know the base and you know the what? You know the quote currency already. Why the quote currency is what? The one that comes second, that is the 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 less the lesser pair. The base currency are always stronger compared to the quote currency. That's just the simple analogy, the simple explanation I can give. You can do some more research on everything on them again. Now, I've explained all this. Now, note you are trading the value of one currency against the other. That is, when you are trading NGN against USD, you are trading the value of Nigerian naira against what? The value of United States dollars. Base currency and quote currency. I've said something about that. The second is the quote. The first is what? The base currency. The price of the pair tells you how much of the quote currency you need to buy 1 unit of the base currency. Yeah. For example, USD NGN. That means the amount of Nigerian naira you need to buy 1 USD, right, is what we refer to as what? The price. For example, you need 1,061 naira to buy just $1 United States. So that's just the simple analogy concerning that. Next, we have pips, we have the spread, and we have the leverage. Right. So just take it as we having me just picking out the most important. You can do some research on your own by doing what? By you can do some research on your own by doing what? By exploring other terminologies as well. Do you understand that, guys? You can do some research by the search on your own by exploring other terminologies. But the most important that I feel you might be needing, these are the ones I picked. I actually pointed out in the course of this what's it called? In the course of this class. So let me pause a little bit. Do you have any question for me before I start with the pips? Is someone have a question?
No, sir.
All right. In the absence of no question, I think I can proceed, right?
Yes, I can proceed.
All right. So let's now move straight to what? Pips, spread, and leverage. Number one, what is pips? That is the smallest price movement in the market. Do you understand?
Yes, sir.
The smallest what? Price movement in the market is what we refer to as pips. That is, I can easily tell you that GBP USD has just moved 20 pips. That means it has moved from one point to the other. When we have your price being stagnant, it's not possible. Hello, can you guys hear me? When we have our price being stagnant,
Yes, sir.
it's not possible. Can
Sir,
you
I
guys
can't
hear
hear
me?
you, sir.
Can you hear me
No,
now?
sir.
No, sir.
Yes.
Ah, God, I beg. Can you hear me now?
Yes, we can.
Okay. I said, can you hear me? You said no, sir. How can you hear the question I asked?
I can hear you, sir.
Emma, how can you hear the question I asked you? Yes, then that means something is wrong somewhere. I'm not getting that. I beg.
No, sir, once you are talking, I'll play half part. I won't hear the remaining part. Then it's going
Oh,
to be again.
that should probably be the network. I'm sorry about that. Now, the pips is what? The smallest price movement. That is, I can easily tell you that GBP USD has moved 100 pips. That is, it has moved from one point to the other, and the value I got in return is something around 100 pips. Do you get that? I'll still teach you, I'll still put every one of us through how to calculate pips value. Trust me. And we are getting there. We are getting there. Yeah, bit by bit. Spread is actually the difference between the what? The ask and the bid price. That's what we refer to as what? Spread. What do we understand by bid and ask prices? Okay, let me just give a simple analogy. Wow, you are not seeing the display. That should probably be from your hand because I feel I think I can still see the fact that I'm still presenting over here. So look, find the solution over there, please. All right, the bid and ask prices is a simple analogy is you trying to sell a phone. Now, you have a price you want to sell. Why the buyers will also have the buyer for that phone, we have a price in mind that he or she wants to buy the phone. Do you get that? So you are talking about bid price when you have okay, fine. I This is my price, and the buyer is now trying. Oh, please just remove a little bit, remove some, maybe remove 5 naira, remove $1, remove $10, please. That's when it's going to be convenient for me to afford this. Then, if it's okay for you, you guys will transact. That's a little bit of what transaction, a little bit of exchange that has happened between the buyers and the sellers in what in that case. So the price in which the buyer is willing to pay for such goods is what referred to as what the ask price. Why the bid price is the price in which I personally, as the seller, that I'm willing to give out my phone. If, for example, I'm willing to give out this phone for $5, then that means someone coming below $5 is actually coming with his own ask price. So if I'm okay with it, then would all right, thank you, Navisat. So if I'm okay with the price the buyer is actually proposing, that is when I will do what? That is when I will now give access. That is when I will give access to the goods in return, in exchange for what? The money. So in a nutshell, we've successfully transacted amongst ourselves. Do we get that now? Hello.
Yes, sir. We are with you.
All right.
I don't
Yes,
hear
sir. We
you.
are with you.
All right. When we're talking about leverage, leverage allows you to what? To control larger positions. That's when I was actually talking about your broker giving you access to larger funds compared to what you have in your trading account. For example, you having $50 in your account, leverage will give you access to some maybe 1 to 100. 1 to 100 means you can have access to someone to the same trades, to the same position, just like as someone having $500 in his or her trading account. That's just a simple analogy for leverage. Now let's now talk about bullish and bearish market. Bullish market is what is actually a market. Yeah, sure. Obviously, I'll be releasing the PDF after the class. I'll be releasing it on the group, and the video will also be made available on YouTube as well. So a bullish market is what?
Thank you, sir.
Yeah, you're welcome. You're welcome. It's actually when the market is what? Creating higher prices. That is, markets moving from $1 to $2 to $3 to $4 to $5 and the likes. That is what we can easily refer to as what? A bullish market, a clear bullish market. A market is said to be bullish if and only if the prices being created by such a particular market is no other thing but what? An higher price, not a lower price. Your price is no longer bullish if the previous price happens to be $5, and in probably in less than 1 minute we can now start seeing what? $2. That means the market is retarding, not progressing. A progressing market, in a nutshell, a progressing market is what? Is actually a market. A progressing market is actually a market that's what? That is creating higher prices. That is, another name for a progressive market is what? A bullish market. Why a bearish market is what? A market creating lower prices. That is, it is trending downward, creating series of lower highs instead of higher highs. Do you understand that? Now, note, knowing these trends help you to decide whether a market is bullish or is what? Bearish. That is, it it gives you access, it gives you opportunity to either make your quick decision, either you are buying or you are selling a particular pair. Now, just let's say, for example, a market has been creating higher prices since Monday, and today being Wednesday. Are you expecting me to now start looking for lower prices? No. Instead, I'll wait for market to retrace a little bit and enter for a buy in which I'm expecting the market to what? To create another higher price. As simple as ABC, guys. Do you get that? So next on the list, simple as this. A bullish trending market means the market initially created a low, followed by what? An high. Now, check something. Your market is only bullish if and only if initially the low created gave what? Another high. So after, what's next? We will now have a low that is what? Higher than the previous low. So that is why I can easily say the low higher than the previous low is now referred to as what? A lower high. Now, this lower high, that is the low created now, the correct low created, will now create another high. In this case, we now have this high being what? Higher than the previous high. That is, so the new high created will now be referred to as what? Higher highs. Now, this higher high will now create another low higher, another low higher than the previous low. That is when we now refer to as the current low created to be what? Higher than the previous low, which is now referred to as what? Lower highs. Sorry, I said lower highs, right? No, this should be higher low instead. A low that is higher than the what? Previous low. Do you get that? So now this high here is higher than the previous high. So we have not we have it not to be no other thing but what? An higher high. So now, in a bearish market, the reverse is the case. We have a series of lows, highs. So instead, we have the higher lows, we have lower highs, we have lower lows, we have lower highs, and we also have what? Lower low. That is, the market is trending what? Downward. So at your own free time, at your leisure time, you can just do a little bit of research, trying to check the main reason behind a market being what? Being a bearish or a bullish market. Do you understand that, guys?
Yes, sir.
Yes.
All right.
Mm.
Oh. So, next on the list is how the forex market works. And I've explained that the forex market works 24 hours a day and 5 days a week. It is what? Over the clock. It works round the clock. Forex market does not sleep. Except on Fridays, it goes to sleep and comes back on Sunday nights. Do you get that? So this flexibility now gives you the opportunity to what? To trade whenever you feel you you are okay to. That is, you don't want to trade when probably you won't be having full time. So though a time is coming when you have to give your all to to the market. That is when we are now considering what? That is when we are considering a full-time trading. But you just considering market as a trading as maybe a side gig, then you might probably be interested in the lesser parts of trading. In You might probably be investing lower what? Lower time. Do you get that? Can you hear me?
Yes, sir.
Yes, sir.
All
Yes, sir.
right. Sorry, the mentor never chops since morning.
We can see your screen now.
You can't see my screen. No, now.
I can't hear you.
You can't hear me. Can you hear me now?
Yes, sir.
All right, that means you can hear me. Thank you so much. So, moving straight to trading times and session. Can you hear me now?
Yes, sir.
All right, that
Yes,
means you
sir.
can. That means you can hear me. Thank you so much, guys. I really appreciate that. I really appreciate the fact that you can hear me. Right. We have different times and session when it comes to trading. You don't just wake up 12 in the midnight and be like you want to enter the market. No. Because your proper understanding of these trading times and session will give you insights as to when to plan yourself to the perfect time to trade. For example, we have three different, three important trading times and sessions. There are more than three, but remember I use the word important. That is the only the only time that it is best for you to have a trade running, or it is best for you, or it is safe for you to enter the market. Number one, we have the Asian session. Number two, we have the London session. Number three, we have the New York session. Now, starting with the Asian session, first on the list. The Asian session is the first session that opens, right? On the what? Market open for a new week. And the time we have the Asian session opening is 11 p.m. to 8 a.m. GMT. That it is, we are considering Nigerian time. I've converted everything to Nigerian time for you. Do you get that? So between 11 p.m. to 8 a.m. Nigerian time, GMT, we have what? Nigeria is GMT plus one. So that means you'll be having, oh, I'm supposed to add GMT plus one here. Sorry. So which means between 11 p.m. to 8 a.m. GMT plus one,
No, I can't see the screen. I don't know why.
that means it's from you. Can we all see the screen?
Yes,
Yes,
sir.
sir.
Yes, sir. We can.
Yes,
Yes,
I
I
can
can
see
see
this.
the screen.
It should probably be from your hand. Sorry. Find a solution to that, please. Try and reconnect, please, if need be. So the Asian session opens between 11 p.m. GMT plus 1 to 8 a.m. GMT plus 1. And the most ideal pair for you to trade at this time is what? The AUD, the NZD, and the JPY pairs. If you check your charts, the JPY pairs has one of the most volatility during this period. Do you understand that? So you now considering the higher time frame bias is really important while trading this particular session. So now when the market is now showing unwillingness to move, that is when we begin to experience consolidation. And the market will now have to consolidate till London session before you see a significant move on it. Let's consider this. Yeah, let's come on here. Euro JPY, guys. Euro JPY, for example, can you see all these move? If it happens not to be news event, you can easily consider a very nice order flow during what? During Asian session. Do you get that? Can you see my screen?
Yes, sir. We can see it.
All right. So that's on that. I'll move straight to the next on the list, which is what? The London session. You have to do some research on your own actually. I'm coming home. All right. You can still see my screen, right?
Yes, sir.
Sorry. All right. You can see my screen.
Yes, sir.
All right. So next on the list is what? The London session. And this is the most traded when it comes to Forex markets. You see majority of traders will love London session. Why? Because the best trading setup can be spotted during London session. Most of the time, New York just gives continuation or entire reversal of what London session has in stocks for us. So, and London session has makes a move of an average of nothing around 50 pips on a good trading day. There are times it moves more than that. There are times it does not even move up to that. But on average, we have an average of 50 pips movement on during London session, for crying out loud, guys. So now the next on the list is what how do we trade London session and what is the best time frame for London session? London session always runs between what 7 a.m. to 4 p.m. GMT plus one. The major currency pairs are ideas for they are ideal for this time. That is the likes of GBP USD, Euro USD, USD card, and so on and so forth. This is the best time for you to spot a very good entry. And the best time frame for you to monitor this kind of pair is the 15-minute time frame. I'm talking based on experience right now. Do you get that? And most trader will tell you the same thing I'm telling you right now. So the session sees the highest what volumes of order execution than any other trading session. That is why I told you guys that the most traded pair and the most traded session is what London session, because it gives the best trading setup, the best trading entry, the best trading entry, sorry, and the best stop loss placement, even TP placement is seen during what? During London session. So most of the time, New York gives continuation of what London has started or a complete reversal. Do you get that? So once you get the direction right during London session, just trailing your stop and riding in the direction is what is all you need next. Do you get that? So next on my own list right now, immediately after London session, is what? New York session. And what happens during New York session is, can we still see my screen?
Yes, sir.
Yes,
All right.
sir.
So during the session, we have what? The New York session runs between what? 12 p.m. to 9 p.m. GMT plus one. So instead of now 12 p.m. GMT, sorry, instead of now 12 p.m., New York session starts and gives a very good optimum trade entry during 1:30 p.m. Nigerian time. Take note of that, please. Take note of what? Take note of that. So the best time for you to monitor New York session is what? 1:30 p.m. Nigerian time. That's when, if you check your Forex factory for fundamentals, you see most of the news, USD news, right? They are usually occurring around 1:30 p.m. to 2:30 p.m. So if you're having it 1:30 p.m., that means we are having 1 hour late on the Forex markets. And if we're having 2:30 p.m. on Forex Factory, that means we're having what? 1 hour difference. It's actually it's just giving 1 hour difference. It gives 1 hour difference majorly. You understand that? So for while trading New York session also, the major pairs are also very ideal for you to trade. The likes of GBP USD, Euro JPY, USD CAR, USD JPY, and so on and so forth. Right? So
Yes,
take
sir.
note, all dollar-based crosses, they will give you a very good setup during this time. Both London and New York session. Do you understand? So dollar-based pairs that the likes of Euro USD, USD CAD, and the likes, surely, because at times they might not give. That means that is when maybe they are kind of consolidating or not moving. But a trending dollar cross pair will give you opportunity during this session. Do you get that? That's that was when I said most of fundamentals usually happen mostly during New York session, to be candid. So next is we are done. We are done with the slide, and I've done. I've been able to give a good summary of what we've been doing lately, and I feel by now we should have a good understanding, a proper understanding of the whole concepts, and the introductory aspect of forex trading should be clear by now. Am I right?
Yes, sir, it's clear. Thank you very much, sir. Yes, sir. It is clear, sir. Thank you so much.
All right. So, do you have any question for me before we call it a day? Hello.
No, sir.
Check through everything once again. If there's any question, please let me know.
Sir, about the the news, the what's it called? The the news about this. You said there is always this news about one
Yeah,
around 1:30 p.m.
news
and stuff.
release. Yeah.
Why don't they make the news around probably 4 p.m. or 2 p.m. since London
Okay.
session is between 7 a.m. to 4 p.m.
Okay. The best answer for that is there are times when news will come even before London session. But news on USD usually happen 8 a.m. in the morning. Do you get that? 8 a.m. in the morning in New York time. So that 8 a.m. now boils down to around 1 p.m. Nigerian time. Do you get that? So now, for example, October 9, we have this, but USD pair FOMC meeting minutes is usually happen either 7 p.m. or 8 p.m. in the night. But now, check something. October 10, that is tomorrow. USD. What time is this? If you can see very well. What time is this? If you can see it very well.
1:30
Eh?
1:30 p.m.
Can you see? It is just normal. It is just normal in United States. So it's very rare for you. GBP pair is the only pair you can see their news around 7 a.m. And that is on Friday, October 11. GBP. GBP, that is GDP, is more like the CPI in USD, 7 a.m. Do you get that? So another, do you have any other question?
average. Can you because my network was bad. I couldn't understand what you mean.
Can I do the words?
Leverage. When you were talking about
All
that
right.
leverage,
Leverage is
my
just the
network
amount.
was breaking, so I
All
can't
right.
hear.
Okay. Leverage is just the amount of money your broker gives to you that allows you to access more than what you have in your account. Simple explanation for that. You can just go online and search for the real explanation. But the simple explanation is your broker giving you access to more funds compared to what you have in your trading account. Do you get that? So if you have $50 and you are using leverage of like maybe 1 to 1,000, you can always access the same position as someone having operating like $500 accounts above.
Sir,
Yeah, Dada.
where can we get the news about
All right.
the
The
time
news
in life?
where you can get the news is www.forexfactory.com. I've already sent it to the group. www.forexfactory.com. So Amores, your question? Do you have any other question for me?
No,
I
sir.
guess if there's any other, we will drop it at the page. It's like we all understand the lecture this night.
All right. Do you have someone talking? Little press. All right. In the absence of no question, wishing you guys a very good sleep. Have a wonderful night rest.
When is the last class? Next class? Sorry.
Bye, sir.
Tomorrow.
Tomorrow.
Okay. Okay.
Yeah.
Thank you. Thank you
Yeah.
for your
Bye.
time. Bye.
You're
Bye,
welcome. Take care.
sir.
Thank
Have
you,
a
sir. Thank
wonderful
Yeah.
you for
night.
the call.
Bye. Peace out. Take care,
Yes, sir.
guys.
Good night, sir.
Good
Yes,
night.
sir. Thank you, sir.
You're welcome.